In order to make your banking system as efficient as it can be, you're gonna wanna follow these 5 steps. Because if you don't, things can get loose, you can start to forget the reason you're doing things, and your banking system will suffer. So today's video is all about the quarterly work you are gonna have to do to run your own private banking system. Let's dive in. All right, so the one thing I just said in the beginning is work. None of you want more work. You're like, oh man, this banking thing is gonna involve work. All right, so let's just call it something different. You wanna make more money? Great. I'm gonna give you 5 ways to make more money and things you have to do quarterly to really make a lot more money. Does that sound better than work? There we go. So it's all in how we frame things. It's all in the way we see things and say things, because that really matters. All of you want to make more money, and if I'm going to give you 5 tips of what to do quarterly to make a lot more money, every one of you would be interested. But if I tell you there's work and here are the things you need to do quarterly and the work you need to put in, you're like, I don't know about that. So I'm going to make this super fun, and all we're going to talk about are 5 things for you to make a whole bunch more money and what you need to do quarterly in order to make sure that happens. So let's dive in. This one is super easy, but really important because it's gonna keep you on pace. What you need to do at least once a quarter is check your cash value. Just log into the portal and figure out how much cash value do I have. So this sounds so basic, but this is what you do with your bank account. This is what you do with your 401k. This is what you do with your investments. You're checking on them probably once a month. But here I'm telling you to do it quarterly because we're gonna build a system and we're gonna build habits that happen quarterly. So this is no different than what you're already used to, because you're already used to checking on your accounts. Whatever accounts you have, you wanna know how much more money do I have or how much less money do I have? Well, the good news is with these specially designed and engineered whole lives, you're always going to have more money year over year, because that's the only thing that can happen, because they are guaranteed. You get paid guaranteed interest plus dividends. So therefore, you're never gonna have to look at your account and be like, whoa, what happened? How come it's worth so much less? Now that might be the case with IULs, that might be the case with VULs, that's probably the case with your 401k or investment accounts, but that isn't gonna be the case with your private banking system in these specially designed whole lives. So once a quarter, you log in and you see what your cash value is. Now there's a very important reason to do this, and we're gonna cover that in one of the other 5 steps, but I'll give you a hint. Number 1, you're going to have opportunities which are gonna require certain amounts of money. For example, some of you might have set up your system, your private banking system, with the purpose of getting all the money back for every single car you ever buy, drive, and own. But in order to do that, you had to capitalize your policy so you had enough money to buy that car. The car is the opportunity. So if you're not checking your cash value, you're not gonna know how much money you have, and you're not gonna know when you have enough to fund that car. So if that's the goal, then you're gonna wanna know when you have enough money to do that. And also, here's another thing. Sometimes when we have big goals for our policies and for our banking system, like a car, maybe you wanna buy a $50,000 car, but you gotta save up 50,000 bucks. That could be a couple years for some people to save up 50 grand. Now that gets boring, you lose focus, you start thinking, I don't know what I'm doing this for. So what you want to do is try to find things quarterly to use the available cash value to keep you going and to keep your money working for you. Because the number one thing you don't want to do is you don't want to take money, put it into the policy, and just leave it sit there and then forget about it. Because although that's better than probably using a bank account, it's not what we're doing here. We're trying to grow your cash value and grow your wealth, which means the cash value has to be out there working a second time. Because remember, somewhere in one of the videos that you've watched, I probably said, this is the only way you can make money twice on the same dollar. And the only way you're gonna know how you're doing is checking your cash value. So now I wanna ask you to check something else, and that is this button right here. It says subscribe. That's right, check it, click it, make sure you are subscribed to this channel. I appreciate that, but go one step further. I do tons of lives and tons of videos. There's a little bell up top. What I need you to do is I need you to smash that bell. So that little bell, what you're gonna wanna do is just give it a big smash. Sweet, the thing landed perfectly. So now I can cut and I can kick it. That's great. But now you're going to be notified every time I put new content out and every time we go live. But let's get back into number 2 of what you're going to have to do to make a bunch more money quarterly. Now, the second thing is something that I can't understand why every one of our clients does not do, and that is do your call with the I-team specialist. So every one of our clients gets a very unique feature, a very unique service, and that is called our I-team. Our I-team is there to help you fulfill on what you wanted to do with your private banking system. But if you're not doing calls with them, how can they help you? There is no cost for this outside of your time, and that time could be very minimal. One time per quarter, set up a call. They will notify you, but set that call up and take the call with them. Even if it's just to kind of go through basic fundamentals of your policy and your bank. But the I-team, when you first set up your policy, if you did the first call with them, they would have set up a map, or they would have designed tools for you like the debt blaster or the gains projector or the large purchase calculator. We would have done something, even if it was a minimum of a cash flow analysis. Our team is there to fulfill and implement what it is you want. But it's not just something they're there for when your policy issues, it's something they're there for the rest of the time you're going to be your own private bank, which hopefully is the rest of your life. And they want to talk to you quarterly because that's their job and that is what they love to do. So meeting with them quarterly, number one, maybe it's just to review the map or the tools that they created, like that debt blaster or gains projector, to see where you're at. Now, let me give you a little story. When I first started this, I started with a small policy. It was $1,000 a month. That was my first IBC policy, not my first whole life policy. That $1,000 a month policy, when I met with the I-team specialist, okay, and that was Jonah back then, he built my map because I was paying off debt, and that's what the map did. It showed me how to pay off debt. And then he also did my cash flow analysis. Now, every single quarter, I had that map posted right up on my wall. And every quarter I looked at it and I knew exactly what the date was because I marked it in my calendar. I literally went into my calendar for the course of a year and I marked out every single quarter, call Jonah, call I-team. Okay, I never needed to call them because he always emailed me quarterly to set up that call. But every time I met with him, what we did is we went into the map because I was paying off debt, and we just did a review. Am I on pace? Am I ahead of pace? How are things looking? We made adjustments. We reviewed my goals. So my goals in the beginning were debt. I wanted to pay off all my debt. So once a quarter, we were looking at how this happened. But here is the other thing I did, and this is what you should do. When I was doing that, every quarter is when I took a loan from the policy. So every single quarter, according to the map that they designed, I took a loan from the policy and I paid down the debts. Then, the next quarter, what we would do is we would look at the results of that. We would look at the debt pay down and the amount of capital that I freed up, and we would recapture that capital. So not only are you going to review your goals, you're going to make adjustments. Because I know in a perfect world, everything on the map would happen exactly how it's supposed to. And for me, it was pretty close. But I was diligent. I was consistent and persistent with what I did. I never missed one of those calls with my I-team specialist. And because of that, I paid all my debt off, and I recaptured all that money that I was giving away to my creditors, and now I am completely debt-free. If that's what you want, then you need to be doing these calls quarterly and making those adjustments just to stay the course. That's really what you're attempting to do. If it worked for me, it will work for you. But if you forget about doing those calls, if you get loose with it, if you start doing all sorts of things, and one of the worst things you can do paying off debt is keep racking more debt up. So you gotta realize there's a little bit of your being diligent here. You gotta be diligent with the things that you set out to do. If you set goals, stick to them and work toward them consistently and persistently. I covered that in another video. So let's move on to the third thing you need to do on a quarterly basis to make a whole bunch of money. I'm trying to make this thing sound exciting. So on a quarterly basis, after you meet with your I-team specialist or during that time, you should be looking and examining your current opportunities. For me, my opportunity was paying off debt and recapturing the money. But what if you're doing it to buy a car? What if you're doing it to lend money on Private Money Club? You're going to want to have eyes on your opportunities. So for example, if it is private lending that you decided to do, Now, every single quarter, this is a really good time after you check your cash value to then go into privatemoneyclub.com and look for new opportunities that fit the amount of cash value you have. Or this is a really good time to make sure that your bookkeeping's up to snuff and work with what you have on your current opportunities. So let's just assume that one of the loans you did on Private Money Club was $10,000 and you were making 12%, which means there should be $100 a month coming in from that one. Great. So the first thing you would have done when you did the loan is you would have set up a loan repayment back to your policy. Or if you forgot to do that, that quarterly review would be the time to do it. So check number one, okay, set up loan repayment. Okay, so now what I did is I noticed I had a loan out there for 10 grand. I then checked to make sure that I had a loan repayment. And then the other thing we want to do is the borrower current. So how I do this is with a Google sheet, and I just make sure that every single month when the check comes in, I put it into a little chart on my thing, and then I can go in quarterly and I can say, yep, fully up to snuff, on time, perfect loan. So then maybe you got another loan for $5,000 at 10%, which is about $41.66 a month. So again, now I've got these two loans, which were both loans for my policy, and now all I'm doing is quarterly is I'm checking in on them. I'm making sure that they're up to date. I'm checking the date of which the loan is supposed to pay back because, hey, listen, we don't want to let the loan go longer than it's supposed to. And if it does, in your note, did you have something in there that said that they owed a little extra money? Because I know if I extend any of my notes, I charge 1%. And you should probably do something like that too. Don't incentivize your borrowers to just keep using your money for as long as they want. If they borrow your money for 12 months, in the 13th month, if they go beyond that 12th month before paying you off, they got to pay the piper again. Put a fee in there. I charge 1%, like I said. So you're just making sure that your loans are up to date, are current, and you're checking as to when do these loans pay off, and then you can start making preparation, which is the next thing we're going to go into. So let's move on. The fourth thing you're going to want to do falls right into what we just talked about. You always want to be looking for new opportunities. Because if you got one deal that's maturing, let's just say you got a deal that's maturing in 1 month, okay? What you're going to want to do is you're going to want to line up a couple opportunities because you got to do due diligence. So you don't want to wait for this loan to mature and pay off. You want to start doing due diligence on other deals that within that time horizon. And the nice thing about privatemoneyclub.com is there's notifications. You can set notifications. You can put search functionality in there so you can find deals that meet exactly what it is you're looking for. So let's say you want to find a deal that is, you got a deal maturing in 1 month. So what you want to do is you want to find a deal that is going to need funding within 2 months, because figure it's going to be a month and then there's a little overtime, and you're going to want to start doing your due diligence. Due diligence sometimes can take some time, which is why I'm trying to get you to get ahead of this and look for these opportunities on a quarterly basis. If it's like debt that you're paying off, right back to that first one that I mentioned, you just want to keep making sure that you're on pace with your debts. Maybe one debt is a little bit slower being paid down, maybe one's ahead. Here's a unique little thing that I used to do. When I was paying my debts down, okay, I would take the loan quarterly, I would pay the loan down. And then what I would do is I would wait for 1 month to cycle, because it took a month for the statement to cycle, and then I would look at how much was I paying monthly, and now that I paid it down, how much is my minimum? And then that would be the amount that I would recapture and recycle back into the policy as a loan repayment. I did this because it was easy for me to do. It didn't take a lot of effort. I kept all my statements. Now I know today a lot of you probably don't actually get statements mailed to you. I still do. Every time they say, would you like paperless statements? No. Even if they try to give me a backpack, I'm like, no, I want paper statements, because then I can look at the prior statement. All right, my payment was $100 a month, but I paid it down with that loan from my private bank. And then the next statement says $50. I know that I can recapture $50 and I don't have to work harder, longer, or take on any additional risk. So with that being said, when you review your debts, when you review your deals, you're going to have to always be looking for the next deal, the next opportunity that falls in line with your plan. Now with that being said, let's move on to the final thing you must do quarterly. The fifth and final thing that you really want to do is you want to be future planning. It's just like everything else. You've got dreams, you've got goals, you got things you want to accomplish. So what you need to do is quarterly, look into the future, evaluate the next 1 to 2 years. Your mapping specialist, your I-team specialist, they're gonna plan things out 2 years for you. So if you're already a year into your 2 years, you wanna start looking into the next year. You always wanna be looking 2 years out with your private banking system. What opportunities are you looking at in the future? What deals do you have coming up that are gonna pay off? What debts are gonna pay off in the next 6 months, 1 year, or 2 years? Because then you can start forecasting what your next move is gonna be. Listen, if you're gonna be the bank and you're gonna create your own banking system, don't you think you should be working like a traditional bank? I gotta imagine that a traditional bank has tons of opportunities in the pipeline at any time. I actually know this to be factual because I know bankers, and bankers always have a whole bunch of deals in underwriting, a whole bunch of deals that they're looking at. And some of them get approved, some of them get denied, some of them are at the right time, and some of them are at the wrong time. Because even a traditional bank has ebbs and flows in how much they want to lend and how much money they want to put out for various types of lending. Your private banking system is the same thing. But if you're not keeping a pipeline, if you're not looking into the future, you are failing yourself. You are not getting ahead of the curve. And then you're always going to be playing defense. You're always going to basically be waiting for something to happen, and then you're going to be trying to rush it forward or try to think, oh, what do I do next? That's lost time. And lost time in the banking world is lost revenue, lost interest, and lost wealth that you should be having. And because I'm showing you this video and I'm giving you these 5 steps and I'm giving you my time, please take these serious, write these down, replay this video in like 2x or whatever the fastest speed is, and just write them down. And then start putting together your plan so that you know how your banking system is going to look, not just today, but next quarter, next year, and into the future. With that being said, folks, if you liked this video, you're going to want to check this one out right here. With that, we'll see you on the next episode.